So you want to learn about ETFs. I'm Leung, I'm an ETF Portfolio Manager, and my job is to take care of ETFs on a day-to-day basis, and I'm here to tell you everything you need to know about them. In today's video, we'll go through what is an ETF, a bit of brief history behind them and how they got conceptualized, and lastly, some pros and cons. So if you're new to the channel, I'm Leung, and I'm here to share with you my experience and knowledge as a female working in finance and to educate on everything about finance, investing, and of course, ETFs. So subscribe along to learn more for your investment journey, and check out some of my previous videos if you're interested in learning about things to consider before you start investing and your risk profile. So what is an ETF? ETF stands for Exchange Traded Funds. So it is a fund which pulls together your money along with other people's, and that collectively gets invested into assets. And the fund gets traded on a stock exchange such as the ASX or the Australian Securities Exchange. Or I like to call them a party mix of securities. So let's go shopping and take a little excursion so I can show you what an ETF is. So let's go shopping for ETFs today. Imagine that you have $5 and the aim for today is to invest in a diversified portfolio. So we're here at the confectionery aisle, and these are all the options that we have to choose from. Firstly, let's just say I did not realize that that was the price of a bag of lollies. And I don't want a whole bag of just strawberries and cream. They get a bit boring after a few. There's also snakes or chewy chocolate flavored jelly beans. I definitely do not want a whole bag of that. But we want a diversified portfolio, so we want as much of this as possible. But we are constrained by our budget of $5. So what should we go for? Let's go for the party mix. The party mix gives you exposure to a bit of everything. So you have your strawberries and cream, your babies, and guess what? You don't need to buy 5 separate bags of lollies. You can just buy the one for a similar price, or the same price in this case of $4.20. So here is our ETF, our party mix of securities. It gives you exposure to a whole bunch of different securities, in this case lollies, and it aims to track the performance of the underlying index or securities, less any management fees and costs. So let me introduce you to Nate Morse, the inventor of the ETF. He was a physicist and a Navy submarine specialist for the World War II, and he was a product developer at Amex, the American Stock Exchange. So during the 1980s, Amex had a problem, and it wasn't just due to the large stock market crash in 1987, or otherwise known as Black Monday. People just weren't trading on the exchange. Volumes were really low compared to other exchanges, such as the New York Stock Exchange and the NASDAQ. And most came up with a way to trade a basket of securities like the S&P 500, just like you would a stock. It took almost 6 years to bring the ETF to life, and he was definitely met with his fair share of challenges along the way. The product got rejected by the Securities Exchange Commission multiple times throughout the span of the 6 years, and even Jack Bogle, the father of index funds and the founder of Vanguard, was not a fan of the ETF at first. But most would not take no for an answer. He kept working on the product with his team, ironing out the issues, and finally, in 1993, the first ETF was launched. It tracked the largest 500 names listed in the US, and it is the Standard & Poor's Depository Receipt, otherwise known as SPDR, or ticker SPY, SPY. And the rest is history. Even to this day, the SPY remains one of the most popular ETFs, and there are now thousands and thousands of ETFs listed across different exchanges all across the world, covering different asset classes such as stocks, bonds, commodities, and cryptocurrency. Now that you know what an ETF is and how it was created, let's go through some reasons as to why they're such a great tool to help you build out your portfolio and some risks associated with them. Diversification. They give you access or exposure to a basket of securities in a single trade. And like I mentioned earlier, it's not just stocks. There are ETFs that give exposure to different asset classes, such as bonds as well, and we'll cover those in much more details in videos to come. They're convenient. They're pre-packaged for you, and you would trade them just like you would any other stock on the exchange. That means that you can trade at any time that the market is open, and in Australia, the ASX is open from 10 a.m. to 4 p.m., Monday to Friday. They're cost effective. The management fees is usually a lot less than actively managed funds, and it'll save you a lot of money in terms of brokerage and transaction costs than you individually buying out each of the securities in the ETF. They're accessible and they have a low barrier to entry. So in Australia, all you need to do is open a brokerage account and you can start investing in ETFs with $500. There are also micro investing apps that allow you to start investing with much less. They're transparent, so information such as the portfolio holding, management fees, and the net asset value or NAV is usually provided by the ETF issuer and is updated regularly on the website. Now let's go through some risks associated with investing in ETFs. The first one is market risk. That is the risk of the basket of underlying securities of assets could fall in value, and that usually leads to a decline in the price of the ETF. Currency risk. So if the ETF invests in international assets, then the ETF will be exposed to currency movements. And tracking risk. That is the risk that the fund's return do not closely mirror or track the returns of the underlying index. And that is my job, to make sure that the fund tracks the performance of the index as closely as possible, less any management fees and costs. In summary, ETF stands for Exchange Traded Fund. They're a way for you to access the underlying securities. So for example, the BetaShares Australia 200 ETF gives you exposure to the largest 200 companies listed on the Australian Securities Exchange by size. So whatever that index does in terms of performance, you can expect that ETF to track and reflect it in its price, less any management fees and costs. You can also buy or sell them just like you would any share on the stock exchange. And that's it for today. ETF 101 in our series of how to start investing for beginners. If you enjoyed that, remember to like and subscribe and let me know in the comments of what else you want to see or any other questions you have. You can also find me on other social media channels such as Instagram and TikTok under the handle Leung. So thank you for watching and we'll catch you next time as we do a deeper dive into ETFs. Let's eat.